Hi there, my name's Lloyd Ross and thanks for pushing play, and I do look forward to chatting with you on the phone very soon. What I wanted to do before we chatted was to step you through this very short video to give you some value before we talk, so you can understand why you're really investing in property to start with, and then some of the obstacles you're probably encountering, and of course the desired outcomes that you're looking for, and where we fit into that mix. So firstly, I want to bring you over to why property. I won't spend much time at this, but from a financial standpoint, this is why you're probably considering, or I hope this is why you're probably considering investing in property. This is the benefit. This is why people invest in property. Let's start with the overarching reason: retirement. The desired outcomes of an investment strategy are typically financial peace of mind. Financial peace of mind. I'm going to be okay and everything's going to be fine. That is what people are trying to achieve. And if you're not, then you need to probably revisit why you're wanting to invest in property. This is the overarching reason what people are looking for and searching for. Second part, which is part of that, is can I retire? Full stop. I don't really want to work past 70, or can I? Am I in the industry that allows me to do that? And do I really want to? Okay, so will I have a secure retirement plan where I can stop working? Most people don't want to work in the job they're in because they want to have some sort of freedom and fun and flexibility before they pass on. So is my retirement achievable? The third thing is, typically, after we've put our own oxygen mask on here, it is, are our children going to be able to be financially secure when they grow up, and can they buy and be in the property market and have financial peace and their own retirement strategy? So some of us look to helping our children. These are the only reasons and the desired outcomes you would want with investing in property. Okay, if you want to be a property mogul and be wealthy and rich and all that sort of stuff, maybe that's a different driver, but typically and traditionally this is what we're looking for. And if you're not, then perhaps you should revisit why you're doing this in the first place. Okay, these are the desired outcomes. All right. Over here, traditionally we have our home. Okay, we want to pay off a mortgage debt and be mortgage free. Most people can achieve that in their lifetime. With dual incomes, paying off a home mortgage debt, they will have a debt-free home in retirement. But the problem with retirement is if you're earning $100,000 or $150,000 combined income already, and you retire and you've got no debt in your house, that's fantastic. But how are you going to have $150,000 coming into your bank account each year? This is really what should be driving you to invest in property in the first place. Having a secure retirement plan so you can actually have income. Not just to be debt-free, but have income. How are you going to replace the money you're earning from your job is the question you need to be asking. If you just rely on superannuation, you can add to your super, and obviously the returns from super and the contributions you make are tax-free, which is obviously a huge benefit. You save about 30% just doing that. And you add to your super, and it might get to $400,000, okay? But if you're making $150,000 now, your superannuation at $400,000 or $500,000 may last what? How many years? 3, 4, 5 years? 6 years? So if you retire at 70, you run out of money at 76. So the superannuation is best put into a vehicle that produces an income, okay? Now, some of you may be able to do that, some of you may not be able to do that, whatever the case may be, that is effectively the objective. Now, over the next 30 or 20 or 30 years before you retire, if you're 40 years of age or 50 years of age, you've got between 20 and 30 years before you retire, okay? That's a good amount of time to build your own nest egg outside superannuation. So what you can do is, if you've got any savings, generally those savings are actually in your property as what we call equity. Okay, that's where your savings are sitting, I imagine, most of the time. Let's say you had $100,000 of equity, okay? This is where property gets interesting. Rather than just sit it there and leave it in the equity in the home to do nothing, okay, you can take it out of your home equity and you can actually use it for a deposit for a property investment. That's an investment property. You borrow the balance from the bank, which is, if this is a $500,000 property, for example, not all of them are that, but this one we can use for this. 400,000 is borrowed, 100,000 deposit, and over the course of 12 years, let's say, this property doubles to $1 million, and I'm only going on the last 60 years of Australian real estate price growth, 60-year historical price growth. This doubles, okay, times 2, so it's worth $1 million. A lot of zeros there. 1 million. So the 100,000 is still in there. You've put down as a deposit. The 400,000 you still owe to the bank, but you've made $500,000 in growth. Okay, you've made 500,000. At the end of this, you sell this property, you give back the 400,000, and the 100,000 comes back into your home equity, and you're left with 500,000 profit. Okay, the only money you put in to begin with was 100,000. The outcome is 500,000. That's 5 times your $100,000 in growth in wealth. 5 times. Can you build up superannuation like that? Traditionally and typically, no, you cannot, because you cannot gear superannuation like you can gear property. You're borrowing 400 versus the 100. It amplifies the returns and losses, mind you, but with property, as it creeps up over a 12, 15, 20, 30-year period, likelihood of it going up is very high in areas where there's high population growth, which is almost in all areas of the world. So you can expect your 100,000 to make you 500,000, okay, if the property doubles. Even if it doesn't double and you made 300, okay, you can sell the property, put the 300,000 into some sort of small, or 300,000 or 400,000 into a small unit. That will match the superannuation you have. So you have 2 vehicles that are producing income to you, and over the course of your life you'll also become debt-free in your own home. So you can have a debt-free home, which is the objective, and have 2 income producing assets. Okay, so you've got at least $50,000 or $60,000 or $70,000 income coming into you while you are retired, because there's no point being retired unless you can do stuff, travel, pay for food, pay for lifestyle expenditure, Netflix and all that stuff, and Wi-Fi, and obviously spend money seeing your children. So you've got to have some income. So these are the real reasons why you'd want to be looking at property. You can have leveraged returns, okay? That's the objective. Now, I want to write this quickly. The obstacles that people come up against as to why they don't do this. There's only 3 main ones. The first one is they don't have the money, okay? So unless you have a certain amount of equity in your home and you're earning a certain amount of money, or you've got savings, then you can't do this, okay? But if you do, then that's fine, it's not an obstacle. So if you're finding money is an obstacle, you do have to save. You have to save to get the deposit, all right? The second obstacle is knowledge. Knowledge, all right? I don't know, so that's the other obstacle, knowledge. I don't know what to do. I don't know where to go. What are the areas? What type of property? Should it be unit? Should it be house? Should it be this? What cities? How should I do it? Should it be brand new, second hand? What are the tax savings? How do I complete a contract? What's the finance terms? What's the valuation like? What's the tenancy like? How do I inspect? A lot of things go into this process. If you are not in the industry, likely you won't have the knowledge. And if you had the knowledge, I wouldn't have a business. So it's okay. It's just that is an obstacle. That's a big obstacle. Because if you don't have knowledge and you go into an investment without it and you make mistakes, it can cost you your desired outcomes. All right, so important that you have the right knowledge. Now you want to partner with people to get it, partner with the right people. The third obstacle as to why people don't invest in property to get the desired outcomes, aside from money and knowledge, is one more thing. Time. Because most people are working 60 hours a week to make ends meet, to be able to pay their mortgage off and build enough money for retirement, they don't have the time to go and acquire the knowledge, okay? Just so happens that the type of industry I'm in with our business is I have the knowledge and I do it every day. So in terms of the obstacles we help our clients move past and through with our services, we save them the time and we give them and show them and provide them the correct knowledge, okay? We can't help this part. They have to do that. Once that's done, then we can do this and we can do this. And we remove the obstacles from your path and you can achieve financial peace your retirement, and your children. Okay? So if you're wondering what we do, that is what we do. We remove obstacles for you to have a desired path to get to this through a quality, sensible property investment strategy. I hope that's been helpful. I wanted to explain it to you before we chat, and I do look forward to chatting with you very soon.